Welcome to The Explainer. Today, we are diving deep into U.S. trade. We're going to cut through all the political noise and show you the actual numbers, the hard data that power the $4 trillion engine of America's economy. So let's get right into it. This quote right here, it really gets to the heart of the whole thing. See, depending on who you talk to, a tariff is either this powerful tool to rebuild a nation, or it's just a tax that you and I end up paying. This one word is at the center of the entire debate we're exploring today. To really get a handle on this, we're going to break it down into 4 parts. First, we'll try to wrap our heads around the massive scale of U.S. trade. Then, we'll take a peek inside the global shopping cart to see what we're actually buying and selling. After that, we'll get into the rules of the game. And finally, we'll jump headfirst into the great tariff debate that's shaping everything right now. Okay, first up, let's talk about the sheer scale of this. Before we can even get into the debates, you've got to appreciate just how colossal these numbers are. I mean, we're talking about figures that are kind of hard to even wrap your head around. Here is our first big number. In 1 year, the United States imported a staggering $4.1 trillion worth of stuff. That's everything, all the goods, all the services that America buys from the rest of the world. And on the flip side of that coin, you've got our exports. This is what America sells to the world. And in that same year, that number was a really impressive $3.2 trillion. Now, to put those first 2 numbers in perspective, here's our total gross domestic product, or GDP. You can think of this as the value of everything our country makes and does right here at home. So you can see just how massive that import and export activity really is in the grand scheme of things. It's a huge piece of the pie. And here's the most important point. These are not just abstract numbers on a screen. The policies that get decided have a massive, real-world impact on how these trillions of dollars move around the globe. They literally affect everything from what businesses can build to the price you pay for your groceries. All right, so we know the total value is in the trillions. But what are we actually buying? What's in America's global shopping cart? Let's break it down. So all trade gets split into 2 main buckets. You've got goods, physical things you can actually touch, and services, which is work people do for other people. And as you can see, the overwhelming majority of what we import, about 80%, is physical stuff. So what is all that stuff? Well, the top categories are capital goods. Think big machinery used to make other things. Then consumer goods, like your phone or washing machine, and industrial supplies, which includes things like petroleum. For services, our biggest import is travel. That's just Americans spending money when they're abroad. And here's a little fun fact for you. Our number 1 imported fruit is avocados, and our top nut is cashews. And what do we sell? Well, funny enough, the list looks surprisingly similar. Industrial supplies like petroleum are right at the top again. And yes, we both import and export it. On the services side, we're huge exporters of business and financial services. And for our fun fact, our top fruit export is apples and our top nut is almonds. So who are we doing all this business with? If you had to guess our number 1 trading partner, a lot of people would probably say China. But, surprise, in recent years, it's actually been Mexico. This table shows our big 6 partners, and just these 6 countries account for nearly half of all our trade. Okay, so we know the what, the how much, and the who. Now, let's get into the rules of the game. We're going to look at the key ideas and the tools the government uses to try and manage all this. You hear this term thrown around all the time. Trade deficit. It's actually really simple. It just means we buy more stuff from the world than we sell to it. And what's kind of wild is that the U.S. has had a trade deficit every single year since 1976. Now, that might sound bad, but many economists will tell you it's a lot more complicated than it seems. And here's where that deficit is the biggest. In recent years, our largest deficit by far was with China at $263 billion, followed by Mexico and the EU. This just means a lot more U.S. dollars are flowing out to these places that are flowing back in for things we sell them. So why do we do this? Why do we import so much? Well, this super simple example with a pair of shoes explains the basic trade-off perfectly. When a U.S. company makes shoes in Vietnam, Vietnam gets manufacturing jobs. In return, here in the U.S., we get cheaper shoes, and the American company makes a bigger profit. The really tough question is, who is benefiting more from that deal? So, to try and influence these trade-offs, the government's number 1 tool is the tariff. And a tariff is, well, it's just a tax. That's it. It's a tax on an imported good. The whole idea is to make the foreign product more expensive so that hopefully you'll choose to buy the American-made one instead. Let's just walk through a really quick example. Let's say a car part costs $10 to import. The US government then slaps a 20% tariff on it. The company importing it now has to pay $12. The foreign sellers still gets their $10, but the US Treasury gets that extra $2. Simple as that. And this brings us to our final section, and it's the big one, the great tariff debate. Let's look at how all these tools are being used right now and what it all means for policy, for power, and for your pocketbook. Trade policy has been on a roller coaster lately. We've seen significant new tariffs put on some of our biggest partners, which then led to legal challenges, which then caused the administration to shift its strategy. The whole situation is constantly changing, which just shows you how intense this policy area is. And check this out for some historical perspective. Way back in the 19th century, before there was even an income tax, tariffs were the #1 source of money for the US government. But today, they're a tiny fraction, just 1.6% of all the money the federal government brings in. And the rates themselves are just all over the map. Lots of products like soybeans or smartphones often have a 0% tariff. They come in duty-free. But then you've got basketballs with a 4.8% tax, blenders with a 4.2% tax. It's a really complex and, honestly, sometimes confusing web. And this all brings us right back to that central conflict. On one hand, you have the argument that exports support about 10 million American jobs, so we need to protect our industries. But on the other hand, the data pretty clearly shows that higher tariffs almost always lead to higher prices for consumers. So which is it? Is it a tool to protect jobs, or is it a tax on families? This is really the multi-trillion-dollar question. The world of trade is changing faster than ever. Will all these new policies actually succeed in bringing manufacturing back home? Or will they just end up raising the cost of living for everybody? The debate is far from over, but now you know the numbers, you know the arguments, and you can make up your own mind.